So this video is just a little example of how you can do a costing analysis, and I'm just going to show you the impact of changing certain numbers around, and you can see the calculations that take place. So using this spreadsheet about the t-shirt company, I'm going to show you the impact of changing certain values so that you can see how it actually works. So this is our spreadsheet that we've got set up. And what we are going to basically look at is what happens when we change certain values. So these are our fixed costs here in this particular area. This is our fixed cost. Now they are not going to change. We know that they're going to stay the same. Now obviously in the future, rent might increase or staff might increase or whatever, but during that particular time period while you do this cost analysis, they are the same regardless of how many t-shirts that you make. Now when it comes to variable cost, this is where it changes. So this will change based on how many items we actually create. So if we look at it from this perspective, right, if we are going to create our t-shirts and we're doing it for £3.50 each, you might find a supplier that will do it for £2.50 per t-shirt instead. And straight away, the knock-on effect is huge compared to our costs. So it's knocked it down to £4 per t-shirt instead of £5, which means our overall profit per t-shirt is now £6. So per t-shirt, £6. If we sell 5,000 t-shirts, we're going to sell, we are going to make 20,500 in profit. The same with the printing costs. Maybe they might increase one month and go up to £1.50, and it has another knock-on effect. These are getting calculated with those equations. So our total variable per item is using these particular costs, adding them all together, and then the total variable is multiplying how much it is per item by how many we sell. So if it's going to cost us, I'm going to put that back to £3.50, a bit more realistic. If it's going to cost us £5.50 to make one t-shirt, we can then start playing around with how many we think we're going to sell and what price you want to charge. So you could say if we were selling t-shirts across the country, how many t-shirts might we sell in a month? You could say we're going to sell 10,000 t-shirts in a month. So using that figure, 10,000 shirt sales multiplied by £5.50 each is how much it's going to cost. So that is our outgoing cost. But our income is £10 per shirt for 10,000 shirts that we're going to sell is £100,000. So our total costs is our variable plus our fixed, add them together. And then over here, this is where we do our big calculation. So we've got £100,000 coming in, 64,500 going out, which means we're making a profit of 35,500. So where break even comes in, that is where we can use it to be really, really clever. So if we decide we're definitely going to sell our t-shirts for £10, and we know that because we have looked at some competitors and we've decided that they're all selling theirs for around £10, and it's a fair price to pay, so we're going to go with 10. And we know that it's going to cost us £3.50 for each t-shirt, £1.50 to print it, and 50 pence packaging. So each t-shirt costs us £5.50 to make, £10 to sell. We're making £4.50 on every t-shirt. So what we need to do is figure out how many t-shirts we're actually going to need to sell. What is this going to be? How do we know how many t-shirts we need to sell? If I click this break even button, what that's going to do is keep trying this number until this value gets to 0. So it's just going to keep playing around. It's going to change it from 10,000 to 9,999 and so on. It's just going to keep going down and down and down until that hits 0. So I'm going to press that button now, and it's worked it out as 2,111 t-shirts. If I sell them at £10 each, and it costs £5.50 to make, then I will need to sell that many and I will make zero. So I'm not losing any money, I'm not gaining any money. That is our minimum target. So you can basically say to all of your shops, your target is to sell 2,111 t-shirts this month and we will break even. We can still pay everyone's wages, we can still pay all the bills, we need to sell that amount. Anything more than that creates a profit. So even if I put 2,112, we now make a profit of £4. If I put 2,113, it's £8.50 and so on. So you can see as this number changes that our overall profit and loss is affected. That is why break even is so useful, because we can decide on our sale price. So if it was a really expensive t-shirt like £80, Dolce & Gabbana might sell a t-shirt for £80, probably still only cost them about £5.50 to make it. They are making a massive amount of money. Now if I do break even again, we only need to sell 128 t-shirts now and we will make zero. If I sell 10,000 like we projected, then we make a huge profit of £735,000. That's how these businesses are making so much money, because they are selling for quite high price and it doesn't actually cost them that much to make it. Right, so hopefully that helps you understand income a little bit better, expenditure with fixed and variable costs, and also your profit and loss and what break even does.